Imagine for a second a world where your finest and worst trading days may happen simultaneously. This seems contradictory, doesn't it? From the turbulent realm of finance comes a weird enigma. However, that very contrast was on full display today. Those lucky enough to tune in to the exclusive live broadcast saw something truly remarkable. In the day trading industry, we were unstoppable. Match after match, victory after victory. Without a single loss, it was an ideal session. The fact that we were able to complete the exchange just before a power outage put the entire neighborhood in darkness speaks volumes about our progress. Following that, I monitored it, and the outcomes were dramatic. A whopping 60% increase in just a few short minutes. We should all be proud of everyone who rode that wave because it was a wild run. Accuracy and timing were demonstrated to the highest degree. That, however, is but a partial account. A terrible, unpredictable storm ripped across the day just as the symphony of achievement was coming to a close. This is going to be our analysis of that. It takes more than hope to make it through these dangerous market seas. A compass, a map, and the wisdom of seafarers from bygone eras are necessities. I made the ultimate millionaire's investment guide for that very reason. This isn't your average spreadsheet or archive of PDFs. This method is the product of more than 10 years of study, testing, and distillation of real-world investing experience. The purpose of this guide is to teach you how to identify seismic possibilities before anybody else does. Real riches is attained by perceiving details that others miss. Just below the description, you'll find the URL. Okay then, let's reveal everything. Whether you like it or not, I pledged you full honesty, and there's no way to hide the truth. If this portfolio has ever suffered a single-day loss, it was today. Here we see the harsh reality of crypto, the tremendous ups and downs of surfing these enormous waves. With a UG, it's ugly. The devastating impact on the portfolio was roughly $48,000, or over 2% of its value. Undoubtedly, it's a knockout blow. But one must keep in mind that viewpoint is crucial in this game. Just to refresh your memory, the beginning point for this journey of transparency was $2,231,000. Profit of almost $133,000 remains in the portfolio despite this carnage. Plus, I've already sold and locked in an additional $90,000 to $100,000 in earnings from my other cryptocurrency holdings. The relocation of that capital is taking place here. In the 9 weeks that I've been documenting this whole process, we have already amassed somewhere about $220,000. Though it dampens the joy of the red day, it serves to concentrate attention on the distant goal. So, what did I do when this recession hit? It was purchased by me. Increasing my Ethereum position today was a smart move on my part. It may appear irrational, like entering a building on fire, but there was logic behind the chaos. Because of the widespread panic, I was able to seize a golden chance. I piled on what I think was a significantly overpriced asset. Is this wager going to alleviate the suffering or increase it? It is yet to be determined. In front of a live audience, I was crystal clear. There is no magic bullet that will prevent Ethereum's continued decline just because I am buying. In this setting, there are zero assurances. In light of the current state of the market, we have decided to take a calculated risk and make a strategic move. Making money isn't the only goal of the game. It's about knowing when to assert yourself, even if it's uneasy. What, then, is the source of this widespread anxiety? Where does the action stand on the international market chessboard? To start, there's the possibility of a government shutdown, in case you didn't know. Your first reaction would be to believe this would cause the market to crash, which would be a disaster. But the past reveals an additional mystifying tale. There is an intriguing pattern that I found when I looked into previous shutdowns. A panic response is clearly seen in the first few days. Market fear indicator, the VIX, experiences sharp spikes. Markets become unstable. Fear permeates everything. But here's the important part. As the political conflict continues, the markets usually end up stabilizing and even turning positive. It doesn't make sense, yet the evidence is there. This time around, we need to examine if that precedent from the past maintains. This confirms what I've been saying over the past few weeks. With liquidity problems and now political brinksmanship, September is infamously a dangerous and unpleasant month for markets. For all intents and purposes, the government shutdown is the last big obstacle to overcome before the fourth quarter, when we can only pray for brighter skies. The goal has never been September, but rather the fourth quarter. For that season, I will be preparing. Naturally, the issue is that there is always the possibility that this time is different. A perfect storm of public uncertainty is being created by the political theater between Republicans and Democrats, and I think that is the exact gasoline that will lead the VYX to pop. However, my investigation has revealed yet another hidden truth. In most cases, the VIX peaks just a day or two before the shutdown begins. It won't just keep going up forever. Not a long storm, just a lightning bolt. If you want to play the volatility, that's a crucial piece of information. Upon reaching its peak, it typically starts to strangely decline, even if the government shutdown has not yet ended. It's a pattern, though an odd one. I have already begun a few planned moves to take advantage of this anticipated volatility, and I am setting myself up to play this final week of market chaos. There's a lot of uncertainty and instability in the world, but that's usually where the best possibilities emerge. Let's take a closer look at the charts because they reveal information that the headlines overlook. The stock market, and more especially the Qs, comes first. Allow me to demonstrate the nuanced changes about which I have been warning. View this chart every day. By the day's end, only a portion of the enormous red push that we witnessed had been purchased. Still, it's not safe to assume that threat has gone. I warned you that the 13-period moving average would be the next reasonable objective once we closed below a critical level here. And that's precisely what happened. The most important thing to consider now is whether we close below 13 or not. In my opinion, the floor will give way if that occurs, and we will descend to our initial objective near the 583.77 level. There's a possibility of a much deeper decline to the 50-period moving average after that. If this wave of selling persists, I anticipate a substantial rebound at that 50 EMA. However, the crypto space is where the real bad stuff happens. Behold XRP, poised on the brink of a line I sketched out for you a few weeks ago. This, I said, was the pinnacle of assistance. If this attempt fails, and we close below this line, I may be forced to leave my position until strength is restored. It might be disastrous if this were to break. Bitcoin is the next topic. I have been sounding the alarm about the impending decline of the 13-period moving average for weeks now. I warned you that a massive red candle would appear if that cross materializes. Okay, I've found it. It was exactly how I had predicted. For those who were wronged by that act, the deleveraging was quick and brutal. Everyone is wondering if we will be able to recover from this. I have not yet figured that out. However, take a good, hard look at this bearish pennant structure on the chart. We may see $25,700 as the next target if a breakdown of this structure is confirmed. Right now, we have $27,500. If this line stays put, though, and buyers move decisively, we will look back on this as one of the best buying chances ever. Both the danger and the potential payoff are enormous. Even though we've been here before, if this is indeed a failure, it will be the first of its type since June or July. As we approach the month of October, it would indicate a fundamentally different and considerably more concerning development. Now, we can talk about Ethereum, the cryptocurrency I chose to purchase earlier today. Among all the charts, this one is the most worrisome. It shattered an important support level that I was hoping would remain intact. I know what you're thinking. Why would you believe in such a sign of weakness? Risk appetite is the answer. Because it was so oversold and depressed, I predicted a strong reversal in price action. A well-planned risk was taken. The unfortunate reality is that it may still totally crumble from this point onwards. There was importance to this line in the sand. Important decisions are on the horizon, but I'm hoping for a dramatic turnaround in the next 2 days. Would you like me to stay in this posture all weekend, unable to move? Alternately, should I take a modest loss now to hedge against a bigger loss later on? Down about $3,390 is where I see the next significant support level. If that happens, our current situation might worsen by $500. My position is quite large, so that's a devastating loss. Time is of the essence, so I am cautiously bullish for the time being. I heavily de-risked for a reason, so keep that in mind. This September, I foretold, would be a rough one. Due to me cashing out my gains, my cryptocurrency portfolio plummeted from over $1.2 million to about $800,000. Right now, I'm re-entering the fray methodically. But I need to see some resilience, some light among all this red. The market is expressing its apprehension and doubt through its language, which may hold insights into what lies next. Buying is just the beginning. I took action today. The true test of conviction occurs during holding. Now we need to know if today's dip was a fatal trap or a once-in-a-lifetime opportunity. Is it a dead cat bounce leading up to the next horrific plummet, or the groundwork for a rebound? Don't sit on your hands while these market shifts unfold. Be prepared for them. There is a lot of planning that goes into your financial future. It's something that is constructed by deliberate choices. If you want to know how to make those judgments with certainty, then you should read The Ultimate Millionaire's Investment Guide. Quit speculating and begin formulating a plan. To take control of your financial future, grab the guide and follow the steps outlined in the description. We are so faced with a pivotal moment. I acted as a purchaser today. While everyone else was bolting for the door, I bravely faced my fears head-on. However, tomorrow I will not be a holder only because of that. We need to be nimble and flexible because the market is dynamic and ever-changing. Will tomorrow bring a miraculous green candle, signaling a turnaround? Alternately, will everything crumble before our eyes? Nobody has written the solution yet. Tell me what you got up to today. Were you in the buying or selling mood, or were you just hanging on? This is just the beginning. The text was transcribed using turboscribe.ai. To get rid of this message, go for unlimited.